The pressure on the dollar has been rising in recent days because of economic data showing inflationary pressures building in the US economy, while crude oil prices remain elevated amid the situation in the Middle East. This week, we've had some hot inflation data from the US. CPI and PPI came out stronger than expected earlier this week, and today we had import prices coming out stronger than expected too. And the dollar responded by surging higher, especially against the Japanese yen, where it momentarily broke the 158 handle before the Bank of Japan stepped in, by the looks of it, by intervening again. Whether or not that will keep the dollar down for long remains to be seen. But looking at the dollar index chart here, you can see that it has been trying to break out of this bearish channel in the last couple of days. It's testing a very important level here at 98.55 to 98.60 area, where we have previous high converging with the 200-day moving average. We also have the 21-day exponential moving average coming into play as well. So a decisive break above the trend here could be significant, at least from a technical perspective, in which case we could easily see the dollar index rise towards 99 and eventually possibly to 100, where it may encounter some resistance. But the prior bearish trend has certainly lost a lot of momentum in recent months, and in more recent trade, the dollar is starting to find its feet again, thanks to rising oil prices and inflationary pressures building, causing bond yields to rise across the board. Now, one currency pair that has caught my attention today is the dollar CAD, which has broken above a major level of resistance around the 137 to 137.10 area. This blue line you can see had offered lots of resistance in recent trade. But today we've broken above it, and the key question now is, can it hold the breakout? If it can hold the breakout today, then we could see the dollar CAD climb towards the Fibonacci levels shown on the chart, with the 61.8% coming in at around the 138 handle, making it a key level and a potential bullish target. However, in the event that the dollar CAD fails to hold the breakout above this key level, then in that scenario, things will start to look bearish once more. But we'll cross that bridge if and when we get there. For the time being, it looks like the currency pair wants to move higher, which is a similar pattern seen across the major FX pairs. A quick note on gold is being stuck between a hard place and a rock. It's been finding mild support because of concerns about inflation. People buy gold to hedge against inflation normally. There's also the Middle East situation, boosting its haven demand. On the other hand, you have a strong US dollar and rising bond yields, which continue to weigh on the appeal of non-interest bearing assets like gold and silver. So it's been stuck between competing forces, and as a result of that, it hasn't managed to make any decisive move. Support at around 4,660 has held, while resistance has also held around the 4,770 level. So it's coiling for a potential break. Which direction it will be is difficult to say at this stage, but if we see the US dollar extend its rally, then that would increase the pressure for a downside breakdown. I would like to see confirmation though, and a break below this trend line would be that for me. Unless this happens, the near-term outlook on gold remains mixed. Thanks for watching. Don't forget to like this video and subscribe to the YouTube channel. I'll see you in the next one. Take care. Bye-bye.